Welcome everyone to the FCAI webinar on workers' compensation reform, your modification factor, and working with legal counsel. I'm Mark Palmer, FCAI Executive Director, and I will be your moderator for this program. A few housekeeping items and procedures you will need to know. As a participant, if you are listening to the audio through your telephone, your phone is automatically muted. Only the operator can unmute your line. During the webinar, you have the ability to ask questions of our presenters in one of two ways, depending upon whether you are listening through your computer speakers or through your telephone. You can submit questions through the chat box on the bottom left of your screen. Just type in your question and click Submit. You can submit questions at any time throughout the program. We will also take live questions at the end of all three presenters, and for that you will press *1, and the operator will take care of you then. There are three presenters for our program today. We have a very informative and meaty program, so let's get to it. Our first presenter will be Kim Robinson, Executive Director of the Illinois Construction Industry Committee, followed by Brian Conan of Conan Insurance Agency, and then Ann Stewart of the law offices of Ice Miller. Incidentally, the sponsor for today's program is Ice Miller. Thank you for that sponsorship, Ann. Kim, it's all yours.
Well, thank you, Mark. I'm going to start just by reviewing the most recent round of workers' comp reform legislation, which was passed just this past May. Some of the major provisions of that bill were that it did establish PPO networks for employers. Unfortunately, it only permits the employer to ask workers to use the network doctors, but it does not require it. So I think from the perspective of the business groups that were involved in negotiating this bill, that was a fairly weak provision. We had hoped for something more restrictive that would lead to a little bit more success than those PPO networks. On the upside, it did provide for a 30% reduction in the overall medical fee schedule. It did establish AMA guidelines, but again, not considered to be the strongest language. We felt that was a pretty weakened proposal. It did put in some good limits on carpal tunnel. It limits carpal tunnel claims to 28 weeks maximum, and that's down from a current average of about 40 weeks. It did strengthen utilization review to prevent doctors from over-treating workers. So there are standards in place now for the extent of treatment that specific injuries should require. For contractors, one of the best provisions, I think, in this reform package was that it did finally put a standard in place for workers who are injured while under the influence of alcohol and drugs, and it's pretty strong language. So no compensation for a worker who's injured while intoxicated. This is another good provision for contractors. It eliminates the lifetime wage differential. From here forward, payments will end when the worker is 67 or after 5 years, whichever is later. It also established a pilot program for collectively bargained workers' comp. This is something the construction industry has been talking about in Illinois for probably 5 or 6 years now. We had hoped for a more extensive program. It is a pilot, so it's going to be limited to 2 unions that will be selected by the Department of Labor, and those have not been selected yet, so we don't yet know which unions will be participating. What didn't get included? These would have been the primary standards that, if you look around at surrounding states that have much more favorable workers' comp rates, these are things that the business group said we would have needed to be able to compete at that level. And one was primary cause, that the workplace injury has to be the primary cause of the injury. We did not get any language to that effect in this, well, no strong language. More stringent AMA guidelines and a much better physician choice, much more restrictive physician choice, stronger PPO networks would have led to a much stronger program. So the bottom line is that even with all of this reform that was much talked about and discussed and debated for about 6 months, Illinois will continue to have the second highest medical fee schedule for work comp in the country. With that, I am ready to turn it over to Brian.
Well, thanks, Kim. We appreciate that. we can take a question or two in between each of the presenters. Again, click in the chat box and ask your question there. I don't see any questions in the queue, so, oh, I'm sorry. There's one from Manta Industrial. Define intoxicated. Kim, can you do that?
I don't know what the definition is, and I will have to refer to the statute and see. So I don't know off the top of my head.
On that same subject, if a worker has alcohol in their system, they are still subject to this causation or not?
What do you mean by currently?
The new laws didn't call for significant causation, but under the old laws, are there any repercussions for that?
If you're under the influence of alcohol or drugs,
right? Yes.
If you're under the influence of alcohol or drugs, the new law has much more strongly worded causation standard for alcohol and drugs. Under the old law, it was very weak, and so even I saw the cases myself. Even situations where a worker was drunk or on drugs, they were pretty successful with a work comp claim.
And there's another question from Vandegraft. Is there any chance to toughen up this law down the road?
Well, you never want to say never. Just, so you understand the perspective I'm coming from, I worked with a coalition of business interests on this bill for 6 months. We ultimately did not support it. And we didn't oppose it because there are quite a few good things in it. We did not support it because if it were going to be something that we could stand up and all agree would be true reform, we just didn't think this went far enough. And the governor said at the beginning the point was to move the needle, to create a more favorable business climate in Illinois. And this law did not accomplish that. Despite a 30% reduction in the medical fee schedule, we're still going to be the second highest medical fee schedule in the country. So that tells you that things are a little bit out of whack. So I will say that I don't think there's a lot of interest on the part of the General Assembly in jumping right back into this issue anytime soon. But it certainly fell far short of what they had said they were going to accomplish. And I guess it's a matter of when the leaders in Illinois get fed up enough with the business flight from Illinois that they really want to get serious about reforms, and not just work comp, but other business reforms as well.
Right. Great. Thank you. Mm-hmm. Okay, Brian, it's all yours.
Thank you, Mark. As was mentioned, my name is Brian Conan with Conan Insurance, and going to be addressing understanding and managing your experience modification factor. And as most of you are aware, it's a number that impacts the insurance premium you pay for work comp insurance, and generally work comp insurance is going to be one of the more significant expenses for many contractors. A couple of objectives through the course of my presentation is understanding that this is a business risk and the risk associated with it having a high mod, and what that impact can be to you as a contractor. Understanding how the mod is calculated is helpful in understanding how to best try to control it, and best obviously try to keep that number down to as low as figure as you can get. Understanding how the work comp mod turns out to be more of a financing mechanism than anything else, because there's many times in the day, because you have claims which increase your mod, you end up financing that claim yourself, because with increased mod comes increased premiums to you. And then lastly, talking about strategies and how to try to manage your experience mod as best you can towards the minimum number that you can actually have as a mod. For most employers, as we've talked, it has a big impact on the work comp premium. In experience mod, I think you have a general sense about what it does, but certainly, the way it's calculated, it takes your payroll and your losses and determines your mod, and it's specific to the type of work you do. Roofers are compared to roofers, and plumbers are compared to plumbers. So certainly the hazards of the job that you're working on, what you do, are taken into consideration. You as an employer can influence what you pay by impacting your experience mod. As many people understand, if you control those costs and it can control your claims, you'll have a lower experience mod, so that'll be a credit for you, below 1. If you have worse claims and worse experience, it's going to be a number that's going to be above 1, and that's going to be an additional amount to you. So if it's below 1, say it's a 0.9, that's a 10% credit. And if it's above 1, it's a 1.1, that's a 10% surcharge. So, certainly we talk sometimes about being a report card. If you're a 1.0 mod, that's not like being an A student. That's certainly much more like a C student, because you can certainly get to a lower mod, and every effort you make towards getting it lower is going to save you money in that process. So you want to work to get to that minimum mod. So the risk associated with having a higher mod, obviously, is you're not as competitive. Certainly you're paying more for work comp premium than your competitors, and that becomes problematic. And you lose out on business opportunities, because there's certainly situations that maybe you can't bid on jobs because you have a certain mod. This is a kind of an example of a comparison of a company, say Company A and Company B, that are in the same business, that have Company A having a 1.5 mod because they have a number of losses in the past, and a Company B that has a good track record that's got a 0.7 mod. So their expense side on the work comp, Company A is paying $150,000 versus Company B at $70,000. So a significant difference, and that significant difference obviously leads to a reduced competitiveness for Company A. Showing that Company A's net cost is 15% of payroll, as opposed to Company B dealing with 7% of payroll, and that's obviously driven by that mod again. So, certainly if you're out there competing for jobs in this marketplace, which is competitive as it is, even these small differences that can be big differences are going to maybe impact your ability to get business. So certainly the lower cost is going to make you much more competitive. So, and the other aspect about the mod that you'll see sometimes is that you won't even be allowed to work on jobs or bid on jobs if your mod gets above a 1.0, which can certainly happen if you have any type of claim activity. So, you start getting limited to not being able to compete on business that you could do competitively just because your mod's above 1, certainly becomes challenging. And the other aspect about that's specific to contractors is that being especially union shops that have higher hourly waged employees, they generally have what's called a contractor's credit available to them if they keep their mod at 1.0 or below. And that discount can go up to 40%. So on top of the discount of having a modification that's below 1, you have this automatic, I shouldn't say automatic, you have this available to you as a union contracting shop to apply for this every year, but one of the thresholds is you have to have a modification that's 1.0 or below. So that's a significant area that you want to pay attention to, making sure that you can work towards keeping that modification as low as possible, especially if it gets close to that 1.0 and you have that contractor's credit, because you'll be losing that, and that can be a significant loss from an increased premium standpoint. So with all that kind of as background, I hope I've established that keeping that modification at the lowest you can is going to be critical for your success and continued sustainability of your business. So that's kind of obviously the laying the groundwork for where, we obviously want to make sure we keep that as low a number as we possibly can. So we say we want to have that low, so how do we do that? How does this number calculated? Generally we're talking about 3 years of payroll and loss information. The current year that you're in is not used. So as an example, if you had a company that had a policy that started as of 1/1/2010, they wouldn't include the year before that, the 2009 year. They'd start from 08 to 09, 07 to 08, and 06, 07. And the reason they don't include the year you just completed is because they don't have time to actually calculate, because the modification, all the information is sent in advance. You get the modification in advance of your renewal, so they can't use the year that you're in currently before your upcoming renewal. So they don't use that. They go back 3 previous, and they'll use that information to calculate the modification. From a standpoint of, we talk in our industry about frequency and severity of claims. You know, when you talk about claims, the frequency is how many claims you're having over the course of that period of time, and severity is how significant or how big that claim is. And from the experience modification standpoint, there is much more impact from a frequency standpoint than there is from a severity standpoint. And the reason behind that is that they figure, you know, companies can have a work comp claim. It's going to happen, you know, generally to anybody. And that claim, if you have it, it can be significant because medical bills can climb very quickly. The concern is, though, if you have a number of smaller claims, it becomes a matter of what's happening from a safety standpoint, what's happening from a management standpoint, on paying attention to what's going on in the field and what's going on in the shop. So as an example of this, give you an example, Company A, Company B again. If you have a Company A with one claim that's $50,000 and Company B with 10 claims that each claim is $5,000, equals that same $50,000. So insurance company has paid $50,000 out to each of these different companies for work comp claims. Company B is going to have that higher modification. And again, that's because of that issue where the frequency is going to be more weighted than the severity of one claim. Technically, they use the first $5,000 of any work comp claim, and they call that primary, and that's weighted heavier than the balance. So again, trying to do your best to control your work comp claims, but you know, obviously the issue there, the frequency is going to be more problematic even than just having one fluky severe claim that, you know, the insurance companies understand that that's going to happen. So you want to try to control, obviously, the claims activity that you have as best you can to keep those down. So one of the things we talk about small claims, you know, I started in 1993, so it's 18 years or so. A lot of contractors, a lot of clients I worked with, they would pay the small claims themselves out of their pockets, and they just, you know, obviously, reason was they want to try to keep them off their modification sheet because they understood how that would impact things. Well, NCCI it kind of figured that out and said, well, how do we address that issue? Well, in 1998, Illinois became part of one of the states that accepted the ERA, Experience Rating Adjustment, and we've approved that plan back in 98. So it says essentially that if you have a medical-only claim, then they're going to reduce the value, the dollar amount spent, by 70%. So if you've got a medically-only claim, you know, it's one of those things they try to take the incentive away from people just paying themselves because they want to have this information be actuarially correct. And they say, okay, so we're going to take that claim that's $3,000, $4,000, $5,000, and we're going to reduce it by 70%. And that's the amount that's going to be used on your experience modification worksheet. The insurance company obviously is still paying the full amount, but from NCCI's standpoint, from your calculation of your mod, they're just going to use 70% of the dollars paid on your experience model worksheet. It'll have an impact, but it won't have a greater impact as it would if they used 100%. So they try to give you some incentive to turn the claims in, have the insurance company handle them, but they get their information then on the experience mod worksheet correct. One of the things about, they talk about medical only. Generally in Illinois, that if the first 3 days, you know, if someone's off work, they get injured, you're okay. It's that fourth day that they get off that they're going to be an indemnity payment paid. And once you start talking about some type of indemnity payment, then it becomes something that's, you know, more than just medical only. So the key there is getting someone back. If it's obviously something significant, you're not going to be able to manage that. But if it's something that's a couple days, the important thing is to get them back to work and get them back to work as quickly as you can, because if you can keep them, if you can get them back to work with only a few days off, then that will again be a claim that will be reduced down by 70% and won't impact your modification anywhere as significantly as a claim that it was paid with some type of indemnity payment. It can be a $100 indemnity payment, whatever, you know, it's going to be a small amount. But once they pay an indemnity payment, other than the medical, they're going to take that whole claim and put it into 100% into your mod, and that's going to impact it obviously more significantly than if it got reduced down. So one of the other areas that we talk about when you talk about experience modification and how they calculate this information is that most employers will just focus on their work comp policy, experience mod, this information a few months before the renewal. Well, if you've had any work comp claims, you really need to be looking at this more like 7-8 months before the renewal, because they have this thing called the valuation date. And what the valuation date is that the insurance company will ship off to NCCI the claims information they have and the payroll information they have 6 months before the renewal date of your upcoming policy, or 6 months following the expiration of your past policy. Kind of said the same way. But so your policy ends 6 months later. They're sending all the information for those 3 years previous down to NCCI. So the issue there, though, is that many times when you have a work comp claim, especially if it's any type of size, if it's small and it's handled in course of a week or two, that's great. But these things can turn into something more significant. Insurance companies can be very conservative and put a number up saying, okay, we're going to pay, there's a couple $1,000s worth of medical bills right now that we've paid, but we anticipate having to pay a significant amount down the road, so we'll put a reserve up. And they'll put a reserve up, say, of whatever number, 50,000, 100,000. It can be a significant number. That reserve information, in conjunction with what's been paid, will look like it's been paid on your experience model worksheet. So that information, paid and reserved information, is sent down 6 months in advance of your upcoming renewal. So since that information is sent down 6 months in advance, it's key to be working with your agent and working with the adjusters and find out where that claim is, especially if you have open work comp claims. So if you have any work comp claims that are open, you want to be calling 7-8 months before the policy, your upcoming policy renews, to find out where that's at. And the goal of it is to get the adjuster to start taking a look and seeing what's happening on that work comp claim, because adjusters have piles of claims, as you might imagine. A lot of can be understaffed, overworked, and they're going to be working on things that is a priority for them. So if you can kind of be the squeaky wheel, find out. Obviously, you want to find out in advance of that 6-month window, so that they'll take a look at it and they'll say, you know what, I haven't looked at this. We're working with the attorneys, and let me make a phone call. And if you can get that reduced down, if you get that either the reserve reduced down or even possibly closed at a lower number, when that information gets sent from the insurance carrier to NCCI at that valuation date, it'll be lower numbers, hopefully. Obviously, the goal is to get that claim reduced down, get that claim moving forward so they can get that reduced down. So when those lower numbers appear on your experience modification worksheet, you'll have a lower experience modification number. So one of the things that we really work on making sure that we as an agency, and certainly you can work with your agent, you can do this yourself as an adjuster, is make those phone calls. If you've got an open work comp claim, do that 7-8 months in advance. Because if you find out 5 months before your renewal that they took this big reserve of $150,000 and they settled the claim for $50,000, well, all that information was sent down to NCCI 6 months in advance with the higher number, and that there's very little opportunity at all to make that any kind of change to that, so that those higher figures will impact your experience mod for the upcoming year. So just one of those areas to kind of focus in on and try to pay attention to, especially if you've got those open claims that you're dealing with. So, and this is a little bit of kind of what I just covered as far as those claims reserves. They basically, they count just like they're paid claims. So when they have those reserves on, and certainly I work with a number of insurance companies, but they're all kind of in that same mindset at times where they're conservative. They put a number out there, and a lot of times those numbers as far as reserves can possibly be overstated. So certainly working with the adjusters to find out where the claim stands, and trying to get them to get those adjusters to look at those before that 6-month valuation date is one of those things that you can help and work on to keep your experience mod as low as possible. As far as calculation, we talked a little bit about this, but if the policy effective date was 1/1 of 2011, the valuation date for all the previous policies. So this isn't just maybe the policy that a year back, but every policy going back that's used for the experience mod is going to have that same date where an adjuster, the company's going to send all that information down, payroll and claims, And if you have that open claim that's 2-3 years old that's still open, those reserves, that number that's out there, is still going to follow along with that claim and be sent down to NCCI and work towards your calculation of your experience mod. So not only your recent work comp claims, but anything going back that you know is still open is something you have to work on to make sure that you can, that you can talk to the adjuster, find out where that stands. And sometimes you won't be successful, but certainly it's one of those things you have to kind of work into a routine if you do have open work comp claims. Because at the end of the day, the work comp policy tends to be a financing mechanism. A lot of insurance tends to be risk transfer, where basically you say, insurance company, you're going to insure my building, here's my premium. If it burns down, you'll pay me, replace it. But with work comp, you're paying the premium, but as you have claims, your experience mod will be going up, and you'll be paying higher premiums in future years. So you tend to basically, if you have any type of claims activity, you tend then have a higher experience mod, and the higher experience mod will lead to an increased premium for you. So those claims you're having, you tend to, over time, generally pay for at least a portion of that. And this is a slide kind of showing an example of that. If you're looking at that, the employer pays column, if you have an employer that has a significant mod, like a 1.45 in this case, they obviously have not done a very good job controlling their work comp claims, and their mod has jumped to 1.45. Well, if you look to the column to the right where the employer could pay, we have software that can do this, and a lot of agents will work with this. It's called ModMaster, but we'll show you what the minimum modification is for any particular client. And this client could have had a mod of 0.66. So, because of their claims practice, their claims activity, their mod's 1.45, they could, in theory, have a mod of 0.66, which means they have this controllable mod, this basically premium that they're paying because of their claim activity, in this case of $158,000. So it really kind of illustrates and shows that by not managing those claims as best you can, it really can get out of control from a standpoint of what you have to pay from a work comp standpoint. And showing again a little bit of illustration about financing of injury costs and how you, as an employer, when you have claims activity, you tend to be paying for your, some of these things over time yourself. This employer has multiple states here, but if you go the third line down, Arizona. So they had a claim in Arizona of $12,712. So if you take that column and go all the way across, this is basically impacting their modification every year. So year one, it's impacting them to the tune of about $6,700. Year two, $13,400 is the total cost, and year three, $20,000 is the cumulative cost. So illustrating for that one $12,000 claim, the actual, because of the increase to the modification, the actual cost of that claim is $20,000 to the actual client. So the client's paying $20,000 more in insurance premiums because they had that one $12,000 claim. So it just really illustrates, again, that claim activity you have, when it increases your mod, you have to obviously pay more premiums, and over the course of the 3 years it remains on your modification, it can do some serious damage to actually having to pay additional premiums. One other thing I'd like to show on this slide is the last two lines, the Tennessee claims. If you go, basically you have the date and then the actual loss. So actual loss of these two claims. They're smaller claims. $6,300 is one, and $6,200 is the second one. Well, the first claim there, the $6,300 claim, actually had an indemnity payment. So actually had some type of indemnity. It wasn't just medical only. And Tennessee is an ERA state. So this whole reduction of 70% of this claim comes into play here if you have a medical-only claim. So this claim at $6,300 is not a medical-only claim. There's some small indemnity payment, and you take that all the way across to the right, and you see about $16,000 additional cost to the client in their work comp premium because of that one claim. You look at the last line there, similar dollar amount paid out, but that claim is strictly a medical-only claim. And you can see the dramatic difference that shows. We go all the way to the right. The 3-year cumulative cost to that claim is about $5,000, $4,700. So that's the significance from a standpoint of getting somebody, back in the shop, back to work, not having any type of indemnity payment, and getting that done on a timely basis can impact from a standpoint of reducing the impact to your mod, and then obviously reducing your cost and premiums over the course of 3 years. So, because at the end of the day, it's your money, and basically these workplace injuries, obviously, is a priority of keeping your employees healthy, keeping your employees safe. But those injuries obviously impact your operation from an operational standpoint, getting work done, but also eventually will come back and actually have additional cost to you from a standpoint of additional costs on the work comp policy. So, trying to keep these things as in control as possible. So with all that, so what can you do? I mean, certainly we talk a lot about the impact, how the mod is calculated. Well, so what can you do to kind of keep that down? Certainly the traditional loss control steps are important. You want to have work with your insurance carrier to get loss control involved, to have the safety talks, the inspections. Certainly preventing injuries is the first step. Certainly it's necessary, but you need to also do additional things as best you can to keep those costs down, especially when you start incurring any type of injuries. One of the things that you can do from a standpoint of many employers can do is regarding trying to do something up front from a hiring standpoint, making sure that when you hire somebody, you're fit for the essential functions of the job, they can do the job. You don't necessarily want to hire a claim. Certainly there's things you can try to address, when you hire somebody. Now, I understand that it's much more difficult for union shops to do anything like this as far as pre-employment physicals and things like that, but it is one of the tools that's available for other operations that maybe have a little more flexibility, or those positions where you can hire and you can do some screening in advance. Certainly there's that issue regarding the squeaky wheel is employees that are disgruntled, unhappy. They tend to be the ones that are, at least in my experience in talking to employers, a lot of them will say that they saw some of these things coming. So trying to get out in front of those things when you have a bit of a problem employee, doing your best not to ignore the difficult employee, but try to address their issues best you can, because you want to try to make sure those HR issues don't turn into work comp claims and work comp issues in the near future. So the other thing about getting in front of these things is getting the claims reported promptly and getting things taken care of in a quick fashion, because you got to get the medical providers involved. You got to get the claim turned in. Certainly, studies have shown that prompt injury reporting reduces the cost of the claim. You let these things drag out, it certainly can blow up much worse than if you got it turned in and you're communicating with the employee and you're basically telling the employee that you're an important part of the team. Show a level of care and concern to the employee that they're not just off work at home watching TV, disengaged, seeing the next attorney on TV asking, hey, if you've been injured at work, call me up. So you want to try to keep them engaged, try to keep them part of the family from a standpoint of the employment level, and certainly from a standpoint of owners and supervisors, making sure that they keep engaged with what's going on from a standpoint of that employee. So again, communicating with medical providers is part of that conversation. Making sure that that there's an open dialogue with what's going on and what's possible as far as maybe getting them to return to work. Certainly, I talked to a lot of different contractors, and the return to work issue is more successful at some than others. But it is one of those things that if you can incorporate that into your program, would certainly help. It's difficult, but if you can create some type of return to work program, many folks in the trades, they just can't stand office work in general. So if you have them in the office doing that type of work, and if they are maybe just a malingerer of some type, they might motivate them to say, hey, you know what, let's get back out there, let's get back engaged in stuff I love to do, I want to do, rather than sitting home, trying to think about maybe, just being bored and maybe taking a claim that could have been resolved quickly and having something dragged out. So trying to incorporate some type of return to work program at some level is important to trying to keep those costs down. So, and as mentioned a little bit before regarding supervisors, making sure that the supervisors are engaged in the process, that good relationship with the employee, and they work with them, find out what's happening, keeping that communication open between supervisors, doctors, employees, making sure that there is that communication and not just, John's injured at home and he's sick and he's off work and not finding out what's happening with him and how he's progressing. So, in the end here, as far as kind of wrapping things up, certainly the experience mod, you have to manage that as best you can. Part of that is understanding how it's calculated so you can work to keep that at a reduced level as best you can. And then certainly working to create a program that will help control that losses on the front end. We talked a little bit about loss control. Certainly that's an important component of it. But then in the back end, when claims, and they will usually occur, making sure that there's a communication between all the different folks involved, and that you have some type of return to work program in play after that. So, Mark,
question.
I think.
Yeah, thanks, Brian.
Mm-hmm.
One or two questions. Manta Industrial had a couple questions. I think they were addressed in your presentation, but I wanted to make sure regarding the frequency of claims, the impact that has on the mod. Does that vary by state?
No, generally, 5,000 is going to be the primary amount from a standpoint. If they're an NCCI state, there are some states that are not National Council on Compensation Insurance. They're the primary kind of governing body that creates the experience mod. An experience mod worksheet is created by them, but not all states. But I'd say a majority of states are NCCI states, and that 5,000. Now, I say that they actually just recently came out with a notification that they are going to be increasing what's called that split point, basically between primary and excess. Primary being, basically that first 5,000 is the most significant. Excess being that other part above the 5,000. It's part of the experience modification calculation, but doesn't weight as heavily. So right now it's 5,000. It's been that way for over 20 years. Well, the argument's been, well, that number should be going up, and it will be going up to 15,000. That will be happening over the next few years. I think it's starting in 2012 or 2013, and they're going to, over the course of 3 years, ramp up that number from 5,000 to 15,000, and then it'll be indexed for inflation going forward. Certainly some talk about, well, will that drive experience mods higher? Obviously, NCCI is going to have to, there's a number of different factors involved in the calculation. They'll be addressing those factors as well. So it's really kind of an unknown. I think it might have a slight increase on what your experience mods are, but until NCCI actually kind of promulgates and creates what the actual rating mechanism, what some of the other figures are going to be, because they told us kind of this part's going to change, but they didn't really tell us what the rest of it's going to look like. So I guess it's a long answer to your question, but currently 5,000 is for all NCCI states. It will be going to 15,000 in the next few years.
Great, thanks, Brian. Executive Painting had a couple of questions, which I think we can get to at the end. Anthony, if you don't mind. Judy had one more question. I heard at another seminar that claims without indemnity paid include only 30% of medical in the EMR calculation. Is this true?
I think you're just saying the exact same thing that I said, but just reverse. So it's discounted 70%, so 30% is included.
Right.
So yes, if it's medical only, you're talking about basically a reduction of 70, or they're going to use 30% of the claim, and that's the number that's going to be used in the experience modification calculation. I will make one comment, is that one of the things happening as of July 1st is that you normally will receive your experience modification worksheet in the mail from NCCI. Well, as of July 1st, they're mailing out a letter to you saying it's available, but you have to go online to get it. So it's one of those things that some contractors, are aware of, and they certainly look at that and they utilize that, and some folks just kind of put in a drawer. So obviously I would encourage you all to be engaged in what that worksheet says, but also be aware that you're going to have to go online. It's not going to cost anything for the employer, but you're going to have to go online and get it now, as opposed to opening up an envelope and it being there.
Great, thanks, Brian. There are a couple more questions, but we need to move along here. We'll get to them at the conclusion. Ann Stewart is our next presenter from Ice Miller. Go ahead, Ann.
Thank you, Mark. I'm glad to be involved with this discussion. I'm going to talk a little bit about how you can work effectively with legal counsel in a workers' compensation claim. Some of the most important things you can do to lower the costs associated with your claim and to assist your attorney occur before a claim is litigated. There are ways to stay involved with your workers' compensation claim to help the claim management process and to reduce your exposure. Many of these steps that I'm going to talk about are done routinely, and that's good. That will help the administration and the defense of your claim. But I've listed, I have top 5 things I suggest that you do to improve your success in lowering your costs, and some of them Brian has touched on as well, so we overlap in some way. But I think these steps are important to lay the groundwork for your claim, and ultimately doing some of the work ahead of time will help you avoid having to pay an attorney to do some of the work. I'll talk about each of these individually, but they're reporting a claim timely, investigating the claim, and with the new legislation and the defenses that are available, I think that's more important than ever. Brian talked about staying involved. I think that's an important step. Asking for your choice of counsel and organizing documents. Those are my top 5. First is timely reporting of the claim. Recent Illinois legislation confirmed that employees have the burden of proving that he or she was injured, sustained an injury, or have a condition that arose out of in the course of an employment. If an employee tells you that you have an injury which he or she attributes to the work, take it seriously. And this may sound very basic and simple, but some people I have heard say, I don't think it happened, so I'm not reporting it. Filling out the paperwork and notifying your carrier does not mean that you agree with what the employee says. And it's okay to note that on the form that the employee said it happened this way, but I don't believe it happened that way. The important thing is to report the claim promptly to your carrier. Another important thing to remember is if you don't report the claim, the carrier could deny the coverage because you didn't report it. You don't want to come in, before the commission and then have to explain why you ignored a claim. That could expose you to more penalties. So I think that's an important first step is to take it seriously if someone says that they have sustained an injury that they attribute to their work. Secondly, investigate. You know your business and your employees better than anyone. I've heard people say I have insurance that takes care of that, but don't simply turn your claim over to the insurance company and forget about it. You'll want to rely on your carrier and your attorney to advise you on the more subtle aspects of the compensability, but you should stay involved, and this starts with your investigation. Questions I put here is, do you have a process for reporting a claim? Do you have a form? Do you have a dedicated person who handles these claims and who has been trained in how to investigate and take the information down? Again, you have the best ability to understand whether the claim makes sense, what's going on in your workplace. Does the mechanism of injury relate to the work done? Does the claim make sense, as I said? For instance, if you have someone who says they got injured lifting an overhead door, is that something that's part of the employee's work? You are in the best position to kind of gauge that. I know there have been some recent carpal tunnel syndrome cases in Illinois. The legislature has addressed some of these with the limitation of hand injuries. But again, is carpal tunnel repetitive injury, is that something that could be caused by your work? Another example is strained back because of repetitive twisting, bending, and lifting. Is that part of the work, or are there other factors involved? So whatever you can do at the beginning to investigate, to do the legwork is important. Of course, some accidents are obvious and don't need your involvement, but sometimes it's the less obvious injuries that are often the most expensive. There are some claims that should be denied as a matter of principle for fraud or false claims or violation of safety rules. Make sure your carrier communicates with you before the decision regarding compensability is made. So again, you don't want to just turn over the claim and and not look at it again. Once you accept it, it is yours, and as Brian has said, it will follow you for a 3-year period. So you want to be involved in the front end to find out, the causes, if there are other factors, and keep track of it. If you have somebody who is trained, who is a safety person, you should look at every investigation. Maybe you can find some trend. Or you should look at every injury, maybe find some trends, and avoid accidents. Post-accident investigations are important. You need to document the allegations, take witness statements. This is particularly important if, for instance, the employee's symptoms change over time. It's good to have a baseline of what they said the day or close to the time where they said they injured themselves. This will also help you determine the cause of the injury or if other factors were involved. So the investigation is an important step to identifying affirmative defenses, credibility issues, and perhaps identifying if there are some pre-existing conditions involved. As I started saying, it's important to investigate the injuries, look for trends, and avoid the accidents from occurring. Obviously, avoiding accidents is the most economical way to reduce your workers' compensation cost. It's important to build safety practices in the way you do business, and I just can't overemphasize that point. By avoiding accidents, you avoid workers' compensation claims, lost days, costs in your health insurance. So again, if you have a safety person involved with your investigation, they can help you identify trends, suggest changes, and perhaps avoid additional injuries. And that will, of course, lower your rates. So there's nothing you can do more that would have a larger impact to your bottom line than having an effective training program and avoiding the cost to your mod and your experience. Having a modified duty work or return to work program is an effective way, as Brian says, to get the employees back to work. I believe that having processes with a return to work program, getting people back to work, staying involved with the claims goes a long way to avoid having claims litigated. I believe a lot of folks file applications because they feel like they've been ignored or they haven't been taken care of appropriately. So first of all, if you can have a return to work program that has modified duty work, you can reduce your lost time and reduce your exposure. I like to call it modified duty work. It's temporary. It's not creating a new job for somebody. It's not asking employees to do other tasks. There are jobs that need to be completed, and this person can do it on a temporary basis. I think that's important for the employee to get back to work, and studies have shown that the faster they get back to work, the faster they get to maximum medical improvement and resolve their claim. Another effective way to stay involved is to have a nurse case manager involved. Sometimes you have employees who are not progressing toward maximum medical improvement, and sometimes if that's the case, an employee will feel that they've been forgotten. If you have a nurse case manager, they can ask the doctor when they'll get to maximum medical improvement, what course of treatment is required. Nurse case managers can go to evaluations, can go follow-up recommendations after independent medical evaluation, and kind of gauge whether the doctor recommendations are consistent. Sometimes when there's an independent medical evaluation, recommendations are not followed, and again, the claim just kind of languishes. Another effective person to be involved with a claim is the adjuster. Many times there's a need for a specialist for medical care. I'm asked a lot of times to find specialists. If an adjuster can do that, you can avoid the cost of having your attorney do that. So if you can get the adjuster to help you identify medical professionals to help with the claim, I think that could help lower your cost. Fourthly, ask for choice of counsel. Insurance companies hire the attorneys, and many times they have staff attorneys who they work with, or they have relationships with attorneys who they've worked cases with in the previous. Many times you can ask for a certain attorney to be involved, and insurance companies will usually agree to that. But that can, if you have a relationship with an attorney, that can help be more effective in managing a claim rather than starting a new relationship. Most employers don't know that they can ask for that. Okay. Finally, on my top 5, it may seem obvious, but to organize documents is important. Many times we will get a mass fax, scan everything, and it comes as one document. There are duplicate documents. It's not organized. Then we will have to spend time organizing them and following up to ask for more information on the claim. So that's additional cost to the claim just to get organized that you can avoid by organizing documents, removing duplicates, sending all the records, the claim records as well as the medical records, so that it can be reviewed more easily and more effectively. So again, those are my top 5 things I think you can do up front to work more effectively with your adjuster and your attorney and reduce your cost. As I said, most of those take place early on before the claim is litigated, but I think if you do some of these things, you can avoid having the claim litigated at all. Very quickly, I want to talk about what I see as some trends nationwide. One is the interaction of the ADA and workers' compensation claims. If you get somebody who, for instance, has permanent work restrictions, you are involved with interactive conversation, you determine you can't accommodate them, they may bring an ADA claim. Very commonly they also say, and by the way, this is as a result of my workers' comp claim. I've been retaliated because I raised a workers' comp claim. And so that is, I'm afraid to say, a routine part of ADA claims. Good defense to that is to have objective reasons for the decision. If you rely on a doctor's opinion related to the restrictions, that's a good objective opinion. That's a good defense to say, no, we didn't treat you differently because of a workers' comp claim. We relied on a doctor's opinion. Another cause for litigation is firing or disciplining employees. Some people are afraid to go ahead and discipline somebody for a safety violation if they have a workers' compensation claim. I want to remind everyone that they should discipline for safety violations, even if it involves a workers' compensation claim. They just need to be consistent with the discipline, and that will go back to if you get a retaliation claim, you can show objective data. We treat everybody this way. We're very consistent in applying the discipline. I talked about the investigation early on. I think with the changes in the legislation with the new affirmative defense for drug and alcohol, for intoxication, we'll see some more litigation testing that. One of the questions was, what does intoxication mean? And I'm sure that will be tested. So I see that as coming down the pike. So again, I want to emphasize how important it is to do your investigation early on, so that if you're going to deny a claim on the basis that the intoxication was the proximate cause of the injury, then you need to have some good documentation. And again, I would want to emphasize that you should discipline somebody if that's a violation of your work rules, consistent with what you've done with other folks. So very quickly, that was my top 5 things you can do to help reduce your attorney's fees, as well as hopefully reduce your experience or your mod rating on your claims.
Great, and thank you. We do have time for some questions here, and I've got a few in the queue. Again, to ask a question, use the chat box on the bottom left of your screen. In addition, if you're listening from your phone, you can hit *1 to ask a live question as well. Executive Painting has a few questions here. Does anyone know the average cost of workers' comp per $100 of payroll for a painting contractor?
I should probably know that off the top of my head. I apologize. I'll see if I can dig it out real quick.
Okay. And while you're thinking about that, Brian, second question, contractor credit is in addition to the Illinois credit, question mark?
Well, Illinois credit, it's Illinois contractor's credit, so we could be talking about the same thing, but the contractor's credit is in addition to the credit you get from the experience mod, and in addition to any credit that the insurance carrier might give you just for being a wonderful client. So there's what's called scheduled credit, which is credit that the insurance company will just give you. And then there's the experience mod, and then there's contractor's credit, which is addition. And the contractor's credit, they have to give you, there's no option on that if you qualify for it. You just have to complete the paperwork each year, and it's not too difficult.
Great. A question from Lene Decorating. We have not had a claim in over 10 years. I hope you've had a lot of clients since then. Pardon me. And our mod has gone up the past few years to 0.96. Why is that, and how do we reduce it?
More payroll. What happens when you don't have any claims and your mod goes up, essentially the payroll that's being reflected on your experience mod worksheet is less generally. So if you, say, lose a year that was a high payroll year, and you add a year that was a lower payroll year, and all the other things being equal, no claims, you're going to have a mod go up a little bit. Likewise, obviously, if you had a year that that dropped off, that was a low year, and you added the big payroll year, again, no claims, your mod's going to go down. So payroll has that impact on increasing your mod. And obviously, with the environment we're in right now, generally, if you're going back 4 years, you had maybe years that had more activity and more payroll. I shouldn't say activity, but more payroll. And those are maybe dropping off, and you're adding years that are less payroll.
Great. Thanks, Brian.
Sure.
An additional question here from Sellington Painting. Is your premium based on the state you work in or on the state you are located in?
Generally, the state you work in, from a standpoint of, if you have employees in California and they're doing something, they're going to use the rates in California for that class code. So okay. Illinois tends to have the highest class code, so generally, the highest rates than our surrounding states. But certainly, if you have an employee that works in Wisconsin, you can certainly list Wisconsin as a state on your policy and list a payroll reflecting their payroll in Wisconsin.
Great. An additional question here. You can reject a claim if it occurs because of not following company safety manual or protocol?
That really depends on your investigation. If it is, you may have some affirmative defenses, and you may be able to reject it if they have deviated so far from their work. They have to prove the injury arose out of and in the course of their employment. I think I said you may discipline somebody for, and you should discipline somebody for not following company policy. And it may be an affirmative defense for you to also reject a claim if there's a deviation. I think it's probably going to be a pretty high hurdle because they're going to say nobody ever followed that policy, nobody's ever been disciplined, or I didn't know about that. So there may be defenses for you, and that's something to maybe have a question offline if you have more questions about that.
Sure.
Mark, I'll go back real quick. The manual rate is $13.07 for painting in Illinois. So that's the NCCI, that's the manual rate per 100 of payroll. And insurance companies can use the NCCI rate, or they can deviate off it as their starting point. So some companies will, if they like that class and they want to write a lot of that business, they'll start their starting point for their rate might be lower than 13.07. Some carriers that maybe don't want to write painting contractors might have a higher rate than NCCI. They still might write it, but their starting point might be higher. And then on top of that, the insurance companies obviously can do different things as far as adding credit or even what's called added debit, or basically increasing the rate just based on what their take is on that class of business and that client. So, but the base rate is $13.07. That's effective currently in NCCI. We have heard, I don't know when they're going to be filed, but I think it's coming down the pipeline that about an 8% reduction is going to be attributed to the rates based on the work comp reform we just had. The issue is going to be, again, more whether the carriers are going to take that rate decrease or if they're going to keep with their current rates they're at right now. Because a bit of a quandary that the carriers are in, quite frankly, is that while it's an expensive line item, a lot of insurance companies, especially with contractors, are losing money on work comp. So if anything in our industry, there's really been not much talk of prices firming or going up, but the one line of business there's been conversation around is really work comp. And so while possibly you might get some base rate reduction, the insurance companies might be are inclined to start pulling back some of the credit they've been giving out on work comp, because as an industry they're losing money. Industry-wide, I think the number is like $1, I don't know, maybe $1.18, $1.20 of money going out for claims for every dollar they're taking in for premium. So and that's industry-wide. Certainly there's carriers out there that maybe are still making money, and that they might be more inclined to not pull back their credits or pull back their discounts. It's just going to, but industry-wide, you're starting to see that trend.
Great, thank you. Mm-hmm. I see one additional question here, and then I think that's all we're going to have time for. Is it reasonable to expect the adjuster to provide documentation to counsel? Normally, by the time legal counsel is hired, the adjuster has all the documentation. When counsel asks for me for the file, I usually give it to the adjuster to handle. Should I be doing this myself?
Is it reasonable for the adjuster to do it? Yes. There are probably occasions there are things that you will not be given to adjuster. If you have taken statements of witnesses or you have a description of what the job is, that might be a reason to go back to you. But if you've turned your whole file to the adjuster, then it's reasonable to assume that the adjuster will turn the whole file over to counsel.
Great. Any last closing comments? Okay. Thanks to Kim Robinson, Brian Conan, and Ann Stewart as our presenters today. We appreciate your prep time and your time here on the webinar. It was very valuable. Please let us know if anyone has suggestions for future webinar topics. I think this is a good medium for programs, and we'd like to do more of these. And with that, thanks for joining us.
The FCAI webinar has concluded. Please remember to disconnect from the conference call and exit the web program. Thank you.